Let's talk about the different home appraisal types. So there are a handful of different types of appraisals that lenders get when somebody's buying or refinancing a home. So the home appraisal types are going to be determined based on both the lender and the program and the individual. So let me give you an example. Normal, let's just use air quotes here, for a normal loan. Somebody's going to be buying a home. They're putting 5% down. They're buying a home here in North Texas, and they're using any generic normal mortgage lender, us included, right? Mortgage Mark. Um, the lenders are going to run that through a process, and Fannie Mae, Freddie Mac, they got this big repository of all this information, and so if they go through that, they're going to say, "Cool, let's get an appraisal." And in that example, they're going to get a normal, air quote, normal full appraisal. And that's where the appraiser is going to come out, go in the house, inspect the house, make sure everything looks good to see what kind of, materials as far as the quality and the condition of the home to say, oh man, we got, gold plated toilets and marble countertops and, decadent ceilings and the Sistine chapels painted in the living room, all that stuff to make sure that they give the condition and the quality to be like an A plus plus. Or hey man, this place is, shag carpets, it's almond colored countertops from the 70s, and there aren't any cabinets in the kitchen, right? And it's just, that type of home, that type of condition certainly is going to bring forth a different value than the previous one with the gold plated toilet. So the appraiser is going to do a full appraisal. They take pictures, they do that. That's the full appraisal, right? That's really quote normal type process. As far as square footage, they should be measuring. Oftentimes they might use whatever's out there as far as like available in terms of the central appraisal district or some other source they may find. So that's the normal full appraisal. So now let's say in our example, somebody's putting down 15%. Same house or same area, same North Texas. There's, doing a Fannie Mae, Freddie Mac type loan. A lot of data. A lot of homes have sold in this area. A lot of, the footprints are similar to other homes. Well, the system may say, you know what, based on data we have here, we'll do an exterior only appraisal or a drive-by appraisal, where that's where the appraiser literally just drives by, takes a picture of the front yard and the house, saying, click, here's what it is, and here's what it looks like, almost just to verify that the house exists. And then a lot of times, again, it's going to be based on the data. The fact that somebody's putting down in this example 15% means that even if they're off by a few bucks, they know that the homeowner has enough equity in there to make sure it's still a safe and a well collateralized loan. So that's the exterior only appraisal, and it does cost less, right? Just because, again, if you're talking normal air quote normal appraisals, making up a number, let's say they're $600 to $700 for a normal appraisal, maybe the drive-by is going to be half that. Because again, instead of spending an hour or 3 hours or whatever it is going to be to do the full appraisal, they can drive by and do the click and move on. So then after that, technically what I'm about to describe is not even an appraisal. You can get an appraisal waiver. We call it a PIW, appraisal, property inspection waiver. And it just says somebody's putting down 30% on the home, buying a home in North Texas. So there's lots of data wherever they're buying. This isn't like rural Texas. Lots of data. And Fannie Freddie say, you know what, based on the borrower's profile, putting all the money down, good credit, all that stuff, and the fact that they're buying this house, which shows a lot of data in the area that says we know what's there. Fannie and Freddie, their automated system may say, we're good, don't even need one. So, well, technically, it's not a type of an appraisal. It is the fact that you don't even need one. So those do exist. And again, different programs require different things. Like there's government programs like FHA and VA. You're going to need an appraisal. It just is. It's just what it is. So that's why I keep saying Fannie Freddie. If you do jumbo, they're going to need an appraisal. So depends on the program, depends on the person, depends on the property, depends on the data available. Another piece, if you're doing an investment property, so when buying an investment property, there may be required what's called a rental analysis. So the rental analysis is going to come in and basically say, cool, in addition to the normal appraisal, they're also going to do more work. And they're going to say, cool, now I'm going to say, okay, if this property becomes a rental, what rental data is out there? And what do they think that the property can rent for? And what's that going to look like? So the appraiser's doing additional work. I don't know. I'm going to ballpark an extra $200 for that cost, $150, $200. Again, things can change, depends on the market, all that stuff, right? But at the end of the day, the real analysis is going to help the lender and even help just the potential buyer or homeowner understand the rental market better because they're going to do that based on the real analysis. The last one isn't really something we do with our type of loans. This is more for um, just like a quick assessment, something you might do for a quick look on the residential side. Sometimes it's more commercial, like banks might do it for their REOs, but it's called a broker price opinion, BPO. The broker price opinion, kind of like an appraisal light, and oftentimes not done by an appraiser. It's going to be done by a broker, a real estate broker. Somebody in the market says, hey, they know what this is. A lot of times that's used for like mortgage insurance cancellation. It could be used for like a second mortgage where maybe the second lien, they're going to trust us doing the first to say, hey, we're doing all the homework, got the appraisal. So they might do a BPO just to validate and just feel good for their own internal checks and balances to make sure they did it. But those are the types of appraisals. The home appraisal types, again, you got your full, you got your drive-by, you got your exterior only drive-by, whatever you want to call it. You might have the property inspection waiver. If it's a rental property, do a rental analysis. If, removing MI or something for not first lien related, you'll have a BPO or broker price opinion. So that is the rundown of what the different types are. Again, ultimately, you as a homeowner, you don't get to pick. It's going to be whatever the program is and requires, and I don't even get to pick. It's not like I get to say, hey, full or not full. It's going to be what it's going to be. So hopefully that answers your questions. If you do have more questions, reach out to the Mortgage Mark team. We are here to help. And as always, when you think mortgage, think Mark.